What if Amazon was founded by Satoshi Nakamoto? Add artificial intelligence, blockchain, and cryptocurrency, and you get Kvadun. This isn't just another crypto project. This is an attempt to rewrite the rules of e-commerce, removing middlemen, slashing fees, and letting people pay for goods with what they already own, cryptocurrency. And the KDN token? It's the key to this entire new system. Let's figure out why Kvadun is the talk of the cryptosphere right now, and why institutional investors are already loading up on KDN before the market realizes what's happening here. What is Kvadun and why it solves a $720 billion problem? Here's an honest fact. Global e-commerce is worth more than $6 trillion per year. But hidden inside that number is a colossal problem. First, payment providers like PayPal and Stripe take 2.9% plus 0.30 per transaction. Visa takes 1.5 to 2% on international payments. If you're selling goods online, every 10th dollar goes to payment processor fees. Second, returns. A full 30% of orders get returned because the product doesn't look like the photo. That's $500 billion per year in pure logistical losses. Third, fraud. Fake sellers, stolen credit cards, chargebacks, money-back scams after goods are received. The industry loses $100 billion per year to this. Add it all up, $120 billion in fees, plus $500 billion in returns, plus $100 billion in fraud, $720 billion in pure waste for buyers and sellers combined. This is the number Kvadun wants to zero out. How Kvadun works, the technology. Kvadun consists of several components working together as one unified system. First, the digital mall. This isn't just a website. It's a full-fledged 3D storefront where you literally enter a virtual shopping environment, view products from every angle, like you're walking through a real-world mall. Why does this matter? Because it solves the returns problem. When you see a product in 3D, examine it from every angle. You know exactly what you're buying. Studies show that 3D try-on reduces returns by 70–80%. Second, AI-powered virtual fitting rooms for clothing. The system scans your body shape, creates your digital avatar with your actual proportions, and you can try on any piece of clothing right in the app. You see exactly how it looks on you, whether the size fits, if the color works. This isn't generic, it's you. Third, an AI shopping assistant. When you enter the Kvadun Digital Mall, you get a personal virtual assistant that analyzes your taste, purchase history, budget, and what you're browsing. Based on this data, the AI recommends products you'll actually like. The result? Shoppers who get good recommendations spend 3 times more than those browsing alone. Fourth, blockchain-based seller reputation. Every transaction, every review, every refund history, it's all recorded on the blockchain and cannot be changed or deleted. This means fake sellers can't flood the market with knockoffs, wipe their history, and disappear. Their entire reputation is permanently recorded on the blockchain. Fifth, the KCLP Conversion Protocol. This is the heart of Kvadun from a technical standpoint. Imagine you want to pay in Bitcoin, but the seller wants Ethereum. Normally, you'd have to open an exchange, sell your Bitcoin, withdraw to a wallet, buy Ethereum, and send it. That's 6 hours and fees at every step. Kvadun does it in one transaction. The protocol scans over 100 centralized and decentralized exchanges simultaneously, finds the best conversion rate between your Bitcoin and the needed Ethereum, and executes the swap in 30 seconds. All in a single atomic transaction, Either it works perfectly or nothing happens. And here's the best part. Kvadun doesn't hold your money. It stays on your wallet address. The protocol just connects two parties through a smart contract. This means even if Kvadun shuts down tomorrow, your funds are completely safe. They remain yours. Why this kills traditional competition? Let's do the actual math. Amazon takes 15% from sellers on each sale. Add logistics fees, another 5 to 10%. Add the cost of advertising on Amazon itself, so anyone sees your product, another 10-20%. Total, a seller doing $100,000 a month through Amazon pays Amazon $25,000 to $35,000. That's 25-35% of revenue. PayPal and Stripe take 2.9% plus 0.30 per transaction. Visa takes 1.5 to 2% on international payments. Kvadun takes less than 0.01 per transaction, less than 1 cent. That's a 99.9% reduction in fees. Now imagine a seller doing $100,000 per month. Through PayPal or Stripe, $2,900 to $3,000 in fees per month. Through Kvadun, less than $10. That's $36,000 or $48,000 saved per year. Multiply that by 1 million sellers, and you understand why this threatens PayPal, Stripe, and Amazon. Second point, settlement speed. Amazon pays sellers roughly every 2 weeks, payment processors once a week. Kvadun, settlement in hours thanks to blockchain. For small businesses working on tight cash flow, this is critical. You sell something in the evening, receive payment in the morning. With this money, you can buy new inventory. Third point, geographic restrictions. PayPal and Stripe don't work everywhere. Selling from Russia, Belarus, Iran, or dozens of other countries? Forget it. Payment systems won't work with you. Kvadun works wherever there's internet. The role of KDN, token, and tokenomics. Now for the most important part, the KDN token. KDN is the primary token that unlocks all features within the Kvadun platform. This isn't just a speculative asset you hold hoping the price goes up. This is a utility token with real demand inside the ecosystem. Here's how it works. When you make a payment through Kvadun, you pay in KDN. Part of these KDN tokens go to paying the platform fee. Part goes to liquidity providers. Part gets burned, permanently deleted from circulation. This creates baseline demand. Second, if you're a merchant wanting to plug your store into the platform, you pay in KDN for feature activation, platform integration, analytics access, and marketing tools. Third, when you hold KDN in your wallet, you earn rewards. It's like receiving dividends from the protocol. Now, the numbers. The pre-sale price for KDN is $0.0012 per token. This is important to remember. It's an early price when the project is still young. Total supply, 400 million tokens. Distribution, 80% to community and investors, 9% to development and marketing, 6% to founders, 3% to advisors, 2% to bounty programs. When you buy on pre-sale, you get a 10% bonus. So if you buy $1,000 in KDN, you receive $100 worth of tokens. Minimum investment, $30. No maximum. Accepted. BTC, ETH, USDT, and other popular cryptos. Tokens distribute after pre-sale ends when the project launches on exchanges. Right now, Kvadun is preparing for listings on major exchanges: Binance, Coinbase, KuCoin, and Kraken. This is a massive moment because it means liquidity and accessibility for millions of traders. Roadmap and upcoming milestones. Here's what Kvadun plans for 2026. This matters because when discussing investments, you need to know what can realistically be executed in the coming months. December 2025. Right now. Digital Mall is live. Exchange listings on major platforms. Kvadun Pay is operational. Q1 2026, first quarter, Kvadun card launch. This is a physical or digital card connected to your Kvadun account. You can withdraw crypto like regular money at ATMs and spend it in traditional stores. This is huge because crypto normally stays in your wallet. With the Kvadun card, you can spend it in the real world. Q2 2026, second quarter, expansion into Southeast Asia. This is a critical market because banking infrastructure is underdeveloped, mobile internet usage is high, and there's deep distrust of government currencies, perfect for crypto payments. Q3 2026, third quarter, open API launch. This means other developers can build applications on top of Kvadun, like how developers create apps on the App Store. This is exponential growth because now tens of thousands of developers worldwide can expand platform functionality. Q4 2026, fourth quarter, target of 100 million active users. For context, that's smaller than Stripe, 5 million merchants, but bigger than most crypto platforms. This means Kvadun hits critical mass for network effects. Why this works right now. 3 trends are converging at this exact moment. First trend, crypto has matured. In September 2024, Bitcoin spot ETFs were approved. For the first time, major institutional investors like Vanguard, BlackRock, and Fidelity can invest in crypto without directly managing crypto infrastructure. This opened up 30+ trillion in potential capital flows. Second trend, AI personalization actually works. ChatGPT proved people will use AI. Kvadun takes this further. A personal AI assistant helping you shop. Research shows good recommendations increase average order value by 200–300%. This isn't marketing hype, it's real buyer psychology. Third trend, 3D commerce is going mainstream. Meta is investing billions in the metaverse. Apple released Vision Pro. Microsoft is working on alternatives. Virtual try-on and 3D shopping aren't science fiction anymore. They're real technologies used by Uniqlo, Nike, and H&M. Kvadun simply combines all 3 trends into one product at exactly the right moment. The upside, big numbers. Now, the investment potential. Global e-commerce, $6 trillion per year. If Kvadun captures just 1% of that market, $60 billion in annual transactions, this creates a $60+ billion market cap for KDN. Current market cap at 0.012 is roughly $1.5 to $2 billion. So if the 1% scenario plays out, the price could 30 to 40x. But let's be more realistic. Can Kvadun really capture 1%? It depends on, first, execution. They need to launch the digital mall. Make it fast, beautiful, and easy to use, not in theory, in practice. Second, merchant adoption. They need to convince millions of sellers to switch from Amazon and Shopify to Kvadun. That's hard because Amazon already has traffic. Third, user base. They need to attract millions of buyers. That requires marketing, branding, everything. If this happens, yes, 100x is realistic. But that's a big if. The risks. What can go wrong? Let's talk about risks honestly. First risk, regulation. Crypto still exists in a gray zone in many countries. If governments decide to ban crypto payments or impose heavy taxes, the project dies. Second risk, competition. Amazon, eBay, Alibaba. These are giants with trillions in market value. If they see Kvadun eating their market share, they can just copy the tech. They have the money and infrastructure. Third risk, execution. This is a young team with ambitious plans. They might fail to deliver technically. Bugs, security issues, slow development, all possible. Fourth risk, token dilution. If the team releases too many new KDN tokens into the market, the price crashes. This is normal inflation mechanics, but it's a holder risk. Fifth risk, post-presale price action. On presale, you get a 10% bonus. When the token launches on exchange, presale buyers start selling and locking in profits. The price could drop 50 to 70% in a week. This isn't a warning, it's just market reality. Conclusion and call to action. So here's the bottom line. Kvadun is an ambitious project trying to rewrite e-commerce history. Technologically, it sounds convincing. Economically, it makes sense. Commercially, it addresses a massive market. But it's a risky bet. On crypto growth. On this specific team's success. On market adoption of the technology. If your risk tolerance is high, if you believe in crypto's future, if you see potential in blockchain for payments and commerce, then Kvadun deserves consideration. Go to the official site at kvadun.com or kvadun.org, study the white paper, see how it works, watch demo videos. And remember, only invest what you can afford to lose. Crypto is volatile. Prices can 100x or go to zero. Thanks for watching. If this video was useful, hit like, subscribe to the channel, turn on notifications, and I'll keep bringing you interesting crypto projects and investment ideas. Good luck with your investments. See you in the next one!